Okay, so today's session is basically going to be on technical analysis. I hope everyone can hear me and I'm loud and clear. And I will just start with the technical analysis. So today's session is moreover going to be an understanding and trading a very specific and a special candlestick pattern, which is called as a Heikin candlestick pattern. So let's go and try to understand. So, so let's understand what is understanding the Heikin candles. Now, till today, we have seen a very important chart, which is called as a candlestick chart. So earlier there was a line chart, and then there was a candlestick, then bar chart. So we have seen a lot of charts here and there because majority of you are in technical analysis. Majority you have seen charts. Majority India is growing as a trading community, and you have seen a lot of different charts. So when it comes to a newbie trader, when it comes to an amateur trader, it becomes really difficult. What should I follow? What should I do? And which kind of charts I should follow? So there comes a very simple understanding, absolutely easy to understand. Maybe you can say for amateur traders, or maybe for beginner traders, as well as for advanced traders. So that is a very simple called as a candlestick chart. Now, when it comes to candlestick charts, we have to go back to the history because candles, majority of you know, there are professional traders in this webinar. At the same time, newbies and a lot of people related to stock market. So we'll understand what is Heikin. So it is a similar to a candlestick. Now, when there was a guy, this called as Munesh Homa, a lot of people have heard about him. He was a rice trader in 1700, and he has invented this entire stick, kind of, you can say, candlestick patterns and all. And while innovating these patterns, there are 3 4 other charting tools also came out, which he used to use. One of them was Heikin, another was a Ranko, then Kagi, and other things. So we'll see a very close chart which will make us understand to the momentum of the price. And we decided that okay, we'll have a session on a very simple Heikin charts. So let's understand what is Heikin chart. So this Heikin chart is very developed by him. His name was Manish Homa. He was a Japanese rice trader, and they used to call as a Heikin more a Japanese term. You can consider it as an average bar. Average bar. So everyone knows what is bar. Bar has come from a bar chart. Average is simple average, which you can just number of you can normal average. You can don't mistake it with a moving average. It is just a normal average. Okay, and it is a technique which is similar to a candlestick. So let's go ahead and understand what this is about. So today's session, try to understand. I want everyone to, when they go out from here, they should understand something. I want them to be at least little knowledgeable about what is Heikin, how it can be used, and maybe while going, you can get a good trading strategy if the time permits. So when you go out, you have an idea what is a price action, because in the end we are going to trade. So for trading, price action is most important. So this is much smoother chart. Heikin has a smoother look as it is essentially average of momentum. There is a tendency of Heikin bar candles to stay in a red, which is a bearish color, in a downtrend, and a green in uptrend, whereas a normal candlesticks are having an alternate color depending on their open, high, open and close. Right. This is an example of a Heikin chart. You can see this is a Nifty chart and this is Nifty daily chart. You can see when it was falling from 12,400, it was continuously red, and that red stopped somewhere around 7,600, and then again green, and then red. So this becomes little bit more easy to see when you are seeing on the screen as compared to candlesticks. So those who have seen candlesticks, so this is just an example how the Heikin candlestick chart looks. So when I'll zoom it little bit, you can check I want you to observe, look into the chart, look on the image or a PPT which I have sent, okay, or whatever is coming on your screen. Look how these candles are forming. So there is a body, there is a wick, so which can upper shadow. Then there is a body which is having no lower shadow, is going up, and then there is a red candle which is having no upper shadow, then again no upper shadow, and then there is a doji kind of candle, and then no lower shadow. So this is moreover similar to candlestick, little bit difference, more smooth. So we'll understand how to construct. See, because we are going to learn Hekinashi, we have to go to the root of the Hekinashi, how it is formed, what is the base, can we really take a trade, because one cannot take a trade unless and unless until you get a conviction about the thing or the system which you are trading on. So we have to understand how this entire Hekinashi is getting constructed. So we'll understand. Understanding formula is more important for us so that we can make a prudent decisions while trading the complex scenarios. Now we can have Hekinashi, which is a chart in front of you. This chart is can be used on positional or higher time frame, monthly, weekly, as well as on intraday. So this is a demo or example of a Heikin candlestick chart. I think I have taken a State Bank of India's chart, which you can see. So it looks very clean. Whenever there is a red, prices are coming down. Whenever there's a green, prices are going up. I think you guys are clear up till this year. So I mean, till now, green, red looks much clear. Okay. Let's understand what is the construction of Heikin candlestick. Normal candlestick charts are composed of a OHLC. So everyone knows open. OHLC stands for open, high, low, and close. So we have candlestick charts, which is Japanese candlestick charts. Everyone thinks it's OHLC. However, Heikin charts is more smoother. It is little bit modified, okay, and the modified formula is more of COHL, that is close, open, high, and low. And we are going to see how it has been constructed. What is the formula behind this price action trading technique of Heikin? What is the formula? So for that we have denoted 0 as a current period or maybe can current days candle, and -1 as a earlier candle, previous trading sessions candle, or a previous days candle. So this is how the Heikin is getting constructed. So a lot of people are thinking that okay, we have this feature in our charting tool, then why do we have to understand? But it's very really important to understand, because unless and until you understand, it becomes very difficult to take trade. You're not so much convinced or conviction lacks. So you have to understand why this trading is going to happen on Heikin. For that, we absolutely need to understand the formulas. So how we are going to construct one Heikin Ashi candle. The first one I'm going to see, as we mentioned, it will be not OHLC, it will be COHL, close, open, high, and low. So the first close candle of Heikin is nothing but a simple average of open, high, low, and close of the current period. Okay, current period, not the previous, not the previous to previous, not the future, the current period. So we call it as a HA close. Okay, we call it as a HA close. HA close means Heikin close. So how it is calculated? HA stands for Heikin. HA close is open 0 plus high plus low 0 plus close 0 divided by 4. Means what? We are taking average of OHLC, or we can say kind of a pivot point. So a lot of systems are having HLC divided by 3 as a pivot point, a lot of systems having OHLC divided by 4 as a pivot point. So you can you just keep in one thing in your mind. HA close is a pivot point. Simple. HA close is a pivot point. Clear? Let's go to the next. So whenever I ask you the close, 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 that means HA close. HA close means pivot point. Pivot points means OHS divided by 4. Clear? Next, Heikin-Ashi open is the average of prior Heikin-Ashi candlestick open plus close or the prior Heikin-Ashi candlestick. Now, very important, HA open. So earlier we finished with close. Here in HA open, which is Heikin-Ashi open, HA open minus 1, previous Heikin-Ashi candles open, HAO plus HA close minus 1, which is previous Heikin-Ashi candles close, divided by 2 means what? Can I say very simple midpoint of a body of the previous Heikin-Ashi candle? See, I'm trying to explain in simpler words. HA open plus HA close divided by 2 of the previous Heikin candle means what? Can we say this is the midpoint of the previous Heikin candle? Yes. So we saw one pivot point of the current candle, midpoint of the last Heikin candle. Okay. Third, Heikin-Ashi high is a maximum of 3 data points. Current periods high, current Heikin-Ashi candlesticks open or current Heikin-Ashi candlestick close. So either open or close or high. So let's make it very simple. High is a maximum either of open, either of close or the current high. So generally, whenever you see Heikin candlestick charts, it is generally today's high. So don't get confused. Don't go too much into the formula. First OHLC divided by 4, which is pivot. Second is midpoint. And third is generally today's high. Very simple. Why? Because we are trying to get a maximum. Fourth, which is Heikin-Ashi low is the minimum of 3 data points. Current period's low, the current Heikin-Ashi candlestick open and the current Heikin-Ashi candlestick close. HA low is minimum of the low, HA open or HA close, right? So now again, don't get confused too much into it. So low means what? It is either today's low or open or close, whichever is lowest. That means what? Today's low is very important, right? So now let's construct it. High, close is pivot point, midpoint, high and low. So we are taking like this. Let's move ahead. So we'll try to understand, because unless we understand, we cannot move for the trading. First, we are use how we are constructed, which I already explained. One period to create first Heikin candle. So what happens, there was a issue, how do we create? Since we are based on a Heikin-Ashi previous candlestick pattern, so when you open any chart, how do we start with the first candle? So by default the computer software takes the first candle as a normal candlestick pattern, and from the second candle it start taking a Heikin candle. This is how the Heikin-Ashi candlestick charts get constructed in the start. Second, once the first candle is calculated, second formula is calculated. Next is close, which is OHLC divided by 4. Third is to calculate the next open, we have to use prior Heikin-Ashi candles open and close. And next is to calculate next high, we need current high, open and close. To calculate the next low, we need current periods low, open and close again. So you see, majority of the time, whenever I'm talking, the more and more importance is going to open and close, open and close, open and close. Heikin open close, Heikin close. And if you see Heikin open close means what? Body. So bigger the body, better thing, less the body. Okay. So these are the steps which we must remember. Of course, today's era, there are softwares we don't need to understand, but it is required for us in trading, which you will see going ahead. So how do we see this entire Heikin-Ashi candlestick pattern in the software, which is Spider Iris software, which you all are using? There are two ways. You can put a Heikin-Ashi candlestick pattern in an indicator pattern, or you can use a changing the current price candlestick primary pan itself into the Heikin-Ashi. So there are two ways you can use Iris, which is our current software, which all of us are using, right? The next, we'll go ahead. How does this working happens? So green candles with no lower shadow indicates what? Strong uptrend. Why? We'll come to that. Green candle signify an uptrend. One can add long position as well as exit the short positions. So the moment we see green, don't go for short. Candles with a small body, which is body means between HA close and HA open, surrounded by upper and lower shadows indicates trade change, whereas risk-loving traders might buy or sell here while others wait for a confirmation for going long and short. So this is how one can see Heikin candle. We'll continue how the Heikin candlestick works. Red candle indicates downtrend. You might want to add to your short position and exit long position. So it's a red candle. Think about it. Color says you, color tells everything to you. Price action. Today we are talking about price action, means red. So whatever, go on a color. Red candles with no higher shadow identify strong downtrends. Stay short until there's a change in a trend. The average open and close help filter some of the market noise, creating a chart that tends to highlight the trend direction better than a typical candlestick chart, which is always there. That is why we are learning Heikin. The color tells us better visualization, gives us a better idea. Earlier they were trading terminals, no charts. Now there are charting terminals, which is giving better visualization. Better visualization allows us to take better trading. We'll go ahead. So long down candles with little long down candles with a little upper shadow represent strong selling pressure. Long up candles with a small and no lower shadow signal strong buying pressure. We'll come to that. When we'll talk about the trading part, we'll go to there. And a long hollow Heikin candlestick shows buying pressure over a 2 days period. Now every time understand, whenever we are talking about Heikin candle, we are actually talking about 2 days, not one day. One candlestick is only one day. Heikin, when we talk, it is 2 day. It is not one day. So today as well as yesterday. Today as well as yesterday. 2 days are being considered inside the Heikin candle. Okay. This is very important. Just keep it on one corner of your brain. When we'll come to that part, okay, you think about it. Small Heikin candlesticks are those with a long upper and lower shadow show indecision. Over the last 2 days, this often occurs when one candlestick is filled and another is hollow. Go to the next. Heikin technique uses modified formula based on a 2 period average. This gives the chart smoother appearance, making it easier for spots, trend reverses, and trend continuation. The main advantage of the charts here are they are very smooth in looking. They're very really smooth, which helps to more easily identify trending direction. So it becomes a lot of people are having, I mean not lot, majority of us are having an issue of understanding the trade and trend. So whenever we try to find out trend, it becomes so difficult. We use moving average, we use this, we use trend line, we use whatnot to understand what is a trend. Here in this case, you know you have used Heikin, color is green, you understand the trend is green. So simple. Okay, no rocket science. So working with Heikin candlestick patterns, this is how the Heikin looks. Okay, very simple. You understand this signifies weakening of a trade, start of a new trend. So whenever you have upper shadow, lower shadow, it is not a good candle in Heikin. One thing you make it, whenever there is upper shadow lower shadow, candle is not good. It is in Heikin candlestick, it is not a good candle. Okay, however, when you go to the next part, which is significant continuation of strong trend, whenever you have this kind of candle, okay, which is having only upper shadow with a green body, it's a very good candle. It's a candle we are looking for. It is a candle we want to trade for. Next we go to red candle. Again, it is a candle with a, there is no upper shadow, however there's a lower shadow. This is a candle we are looking for. We want this kind of candles. If we see this kind of candle, okay, start thinking about something to do. Next is we are having two types of candlesticks in Heikin, having a big longer shadow, big lower shadow with a small body. So in original candlesticks, we call it as a doji. So this is also doji kind of things. This is a candle which we are not looking for, but we are going to observe them because very soon, okay, there is possibility of trend reversal going to happen. So till now we have understood what is Heikin, how to use it, what is the history, okay, construction of the Heikin, and now we are going to understand there are a lot of chartists out there in my webinar who are thinking, can we use Hekinashi maybe the old classical way? Yes, you can do charting on Hekinashi, you can identify support resistance, you can draw trend lines, you can have retracement on Hekinashi, similar fashion the way we stood with the classical parts. You can have some patterns also as well, a triangle wages and trade setups, you can do that. And of course every time you can work the way similarly. Advantage is you are very clear. So when you say, when there is a breakout and there's a red candle on a Heikin, now classical guy will say it's a breakout, but a Heikin trader guy will say, oh, there's a breakout, however there's a red candle, be cautious. That's the difference, how Heikin is um, going to uh, get useful for us in a trading. Now this is, I think, I'm sure all of you are waiting for this, and a lot of people are thinking there's something which you're going to learn. I want everyone to understand. See, trading. When we talk about the trading, we are talking about no robo trading, no algo trading out here. We are talking about you as a human trading onto the computer. So now your brain works in n number of datas, makes a decision, takes a trade. So now, while taking a decision, one thing I want to push here is, entire thing in a stock market, it's not objective, it is more of subjective. It is subjective, not objective. If it is objective, then algos are there, robos are there. Here when it comes to human being, it is more subjective, and that is the reason I wanted you to understand each and every details of Heikin, so that when we are going to take a trade, it is a brain going to take a trade rather than a machine going to take a trade. So I guess everything is clear till now. You understood. Now let's go to part of the implementation. Okay, here it goes. What is a strong candle in Heikin? Strong candle. Okay, so you can see these are all the candles which are strong candles. This, this. You can check my mouse. This and this. So all these are strong candles. Why they are strong candles? Very simple. They are having a flat bottom. They are having a flat bottom, and they are green in nature, in color. So flat bottom, why strong? You have to understand, flat bottom is a stronger. Okay, why? You can call flat bottom candle, or in a specific technical terms, it is called as a bullish belt hold candle. Okay, or in a vague language, we can call as a taklu candle. So a lot of people say taklu candle is there with a green color, buy. So a lot of people say you can call as a flat bottom, you can call as a bullish belt hold, as well as you can call taklu candle. Now, why it is more important? You have to understand. Okay, whenever the taklu candle you buy, but why? Why? There's a simple reason. We understood construction of the candle, and we came out with a thing. The low is the lowest low. Low is the lowest low. And when there is a taklu candle, or when there is a flat bottom candle, that low is above the midpoint of previous HA candle. Why I said low is above the midpoint of previous HA candle? Because yesterday's midpoint is equal to today HA open. So today's open is above actually previous low. So low is above the open. That means what? The trend is strong. This is a strong trend. Open is a midpoint of yesterday. Low is today. If my low of a candle is above the midpoint of a candle of yesterday, that means what? We are in a strong uptrend, because every time we are going, we are trading above the midpoint of the candle. So we are in a trend. We can say definitely that we are in trend. And that is significantly shown on this entire candlestick in a form of a flat bottom or bullish boulder candle. So you understand, strong candle. Now, if you understood, I'm talking about a strong candle. Lot of people have started making decision. If there's a strong candle I see on a chart, what I'm going to do? What will be my action? That we'll see later on. Low is higher than a previous midpoint of significant size of the body. Okay, so this is a strong candle. Now you understood what is a strong candle. Now we want to understand what strong candle we want. Okay, first is it should be flat bottom. Okay, it's a flat bottom. Next, I'm trying to find out a candle which is having a higher high. So every candle is having a high. So this candle is high. This candle is also having a high. This candle also having a high. I want strong candle, which is a flat bottom candle. However, it should be higher high. It should be making higher high. This is my second. Third, green, it should be in green in color because I want a strong candle. See, today we will be talking all about on a buying side. You can check whenever you want to sell, it is just vice versa. So we can say higher high, lower low in a red candle. If it's a flat bottom, it will be flat top in a red candle, just exactly vice versa. Next, one trend reversal candle, okay, above the high. Now this is very important. You understood flat bottom, good. You understood a higher high, good. Third, you understood color should be green. And the fourth is very important. There has to be one candle somewhere near the bottom, somewhere around a trend reversal, whereby the candle should close above the previous day's candle's high. This is also very important. So I want a flat bottom whereby it should be higher high. And so you can check all these candles. First candle, second candle is there. This candle has closed above this high. Okay. This gives me, okay, now I'm in a good trend. I'm in a strong trend. The momentum has, the bulls are in momentum. Okay. Very importantly, it's a minor thing. So that is why I wanted to take you from bottom, and then now fourth, fifth, the body, the significant, the body of the candle should be significant. And now the last one is avoid lower high candles. That I will tell you later on why to avoid. Okay, so these are all minor things you have to keep it in your mind. Okay, now tell me, if this kind of candle which is having all these features are there, which is generally it is out there, generally whenever there is a trend reversal you can always see this kind of candles. It's very easy to see, it's very easy to visualize. What is a bias? Can I say the bias is positive bias? Can I say this? If all of you are listening, say yes. I can see you are nodding your head. Okay, say it's a positive bias. Next, look for buying opportunity. Can I say the bias is positive, candle is positive, bias is positive? Then what should I do? Of course, I should look for buying opportunities. Next, then can I say the same thing? If I'm looking for buying opportunity, I should avoid short selling as well as, exiting opportunities or selling opportunities. And the next one is I have to decide now, since candles are with me, trend is with me, can I decide a trade by taking my trade initialized conditions? So again, I'll just strongly repeat here. We are in a trading, Hekinashi, we understood the strong candle. We understood the specific strong candle. We are trying to understand if there is a specific strong candle available, then what is the bias? The bias is positive. It is a buying opportunity. Avoid short selling and take a decision depending on your decide trade initialized condition. So what should be my trade initialized condition? I want to buy. I want to buy. I decided, okay, there's a good candle, made a decision in mind. I got a knowledge, and then made a decision. It's a positive bias. Okay, what is the action I'm planning to do? Planning to do, not I have not taken it action. I want to go for a buy. Now, what are the ways I can look opportunity for buying? I'm not going in a classical analysis, trade line breakout and etc. and support and resistance. We are going in a price action theory. So I'll say I can buy in terms of moving average crossover, okay, because I want to buy from lower side, or it can be any moving average crossover, whichever moving average crossover I see. Maybe you can take 13.5, maybe take 21.5, maybe 13.3, whichever you are comfortable with. Everyone is aware of that. You can take a moving average crossover. What we do, I'm going to come up with those slides, but this is the way someone can think of. I made a bias, I got a strong candle, bias is positive, I'm making a decision of buying. Then how do I buy? Can I look for moving average crossover? Yes. Next, can I look for Hekinashi green candle or lower time frame? So I don't want to even look at moving averages. I can take a buying decisions on a bullish candle of a Hikinashi itself on a lower time frame because I already made up my mind that I want to buy. Very simple. Just open your chart and just buy, right? And third is maybe price closing above specific moving average, or you can say price crossing the specific moving average. So these are the ways you can attempt to buy. You're thinking to buy. Okay, right? We'll go to the something which is more probability having this which we attempt. Okay, now for that we have to understand a term called as VWAP. Now a lot of people must be aware of VWAP. VWAP is volume weighted average price. Now it is probably the most important price in a day having the highest amount of volume happening. It's a trading benchmark used by traders that gives average price security throughout the day, right? Next, the volume weighted average price, we have appears as a single line. You can use it in intraday chart, 15 or similar or moving average logs. And then retailers and professional traders may use VWAP as a part of their trading rules. How it is been constructed and calculated? Generally, all the charting softwares are having VWAP. However, if there is no VWAP, you can always find out VWAP by this, multiply volume, a specific price, and divide by the volume on every trade. So you end up getting VWAP. Now, why we have come to the VWAP? Because I want to come out with specific trade action using VWAP. Okay, so I made up my mind. Okay, now how I'm going to initialize my trade initialize condition. Okay, so it's a VWAP which I have to start looking for. Okay, VWAP is what? Volume weighted average price. Okay, then I am going to buy. Okay, I already decided. Okay, when the price is giving me, price is closing or price is trading above VWAP on a lower time frame. So I have seen one candle, okay, which was a daily candle, which has given me buy. Which made my mind that I'm a positive bias. So overall, the short-term trend is bullish. Then why should I go against the trend? What I do is I go on a lower time frame while trading in intraday and start looking for buying opportunities. And that buying opportunity I can start looking on a lower time frame, which is a 3 minute time frame. Okay, and that's a 3 minute time frame I can use. And at the same time I start looking, okay, the VWAP should be either flat or rising. So these are the trade initialized conditions or TIC which I can show everything, either of them. So here we discuss, you can use any one of them. Out of that I took a moving average closing, which is a VWAP closing, one part, and I'm just using it clearly. Let's move ahead. Now this is something which is very important, which is a little different than all traditional traders. Okay, how we are going to use it now? Since I'm an intraday trader specifically. I'm talking about not me as intraday trader, we all who are thinking right now, okay, about trade, we are learning the intraday trading. So since we are thinking about intraday trading, we have to understand one thing is, this is my trade initialized condition. I understood VWAP, I thought of VWAP, I went and checked VWAP in a 3 minute time frame, and then it should be rising and flat, and it given me close, I bought. However, before that, there is a special condition which is very important, which I need to see. That is how the market or how that specific stock has opened today. Has it opened lower, or it has opened higher, or it was a flat? This is the most important condition. So for us, what we want, we don't want to fall in a trap. Already it is a gap up and then it's giving me a buy and then going up. I avoid that. So the best trade setup for us will be, we need gap down. We need gap down for buying. A lot of people will get confused. Gap down means bearish, gap down means negative, gap down means, oh, market is going down. We don't want that. We think gap down is an opportunity for us. Why? Because I already made my bullish mind. It's a positive bias. I'm not going to buy just like that. I'm going to buy only when my trade initial condition is going to get satisfied, my trade initial condition, as well as it is a gap down. So I'm looking for a gap down, or you can say first 15 minutes or first 30 minutes trading lower. And it happened, it gave me a gap down, or it trading lower, and then is a VWAP. My 3 minute candlestick chart crosses VWAP after gapping down. Okay, so what happens? That I will come to you. Okay, and that's where we buy. That's where we buy. So clear how we are buying. very simple, no complex. Okay. Now, since you are planning to do intraday trading, I will be showing you a lot of examples, of course. Okay. Moment we buy, do you want to buy in the morning and stay in the trade till 3 o'clock? Do you want to buy in the morning, just buy and maybe come out next 10-15 minutes making some money? Or do you want to buy and just lie down and do nothing for 3-4 hours? What is the best way? The best way is you buy, you enter, and in some time you should exit. That's the best way, right? Because it saves your time. Okay, it is making you very much unbiased. You're not relying on so many other factors. So the best idea is, how can you exit or do profit booking? VWAP is very close to the price. VWAP is changing. If the prices are moving up, VWAP will also move up. If the prices are moving up, VWAP will also go up. If the prices are coming down, maybe VWAP is not changing, and the moment prices closes below VWAP, already we are in the money. Already we are in the money. One can book the profit. So simple. Okay. Next, we can have a fixed percentage return. I just want 1%. I bought at 160. Okay, it gave me 161.70 or 162. I'm out. Now you will understand why 1-2%. Very easy, very fast, very quick to come out, as well as it is not a 1%. You're doing intraday trading. Of course, even in our broking house, we provide a lot of intraday margin facilities. I can understand a lot of others also providing intraday margin facilities. So what happens? If you're buying some share or SBI 100 shares at 15,000 16,000 rupees, so I think you're just end up paying a meager amount of 2-3,000, and on that 2-3,000, if you're making around 200-300 rupees, so that doesn't count as 1%. It's giving you much more in terms of percentage return. I do agree, absolute returns are very less, but in terms of percentage much higher, as well as you're not use your money. So it is a good strategy for them who are really quick to exit, that you can book profit in 1% or 2%, or you can wait prices coming down and close about VWAP. The third way to exit is, you can always trail the stop loss below candles, below each candle, and you can. So you have to be very quick trader. In entire these conditions, you have to be quick trader. Now, of course, we're taking trade. That doesn't happen that you take a trade and every time you'll go right. Okay, we are not that lucky. Since we are trader, everyone has gone through this. So of course there will be a time, lot of times, when your trades will go wrong. But what we have done is, we have tried our best and put a probability of highest chances of getting right by doing all the TIC conditions and positive bias. And why we took this, why we decided, that also I explained. Trade exit. Okay, you can exit the trade the moment it closes below VWAP or it trades below VWAP. Lowest low. Now here the subjectiveness is coming. Lot of people will say, sir, we took a trade, हमने trade तो ले लिया, अब ये trade ऊपर जा रहा है, तो सर stop loss क्या लगा है? Now if I tell you, stop loss 2 candle का low लगाओ, in some intraday volatile movement my 2 candles will be more than 1%, 2%. In some day the candles are very low, small, some day it is big. So here comes your own subjectiveness, here comes your own thinking, that how much stop loss. So it can be a low of a previous 3 candles, lowest low of previous 3 candles. If it's normal, if it's a high volatile, you can keep it lowest low of a previous 2 candles. So make yourself comfortable with the subjectiveness. Don't try to make algo out here. ये बाय ये ट्रेडिशन में वीवैप होगा, वीवैप के क्रॉस करेगा तो आपको स्टॉक मिल जाएगा. स्टॉक मिलने के बाद में योर सब्जेक्टिवनेस, हाउ वॉलेट यू आर, दैट कम्स इन द पिक्चर. आपने स्टॉप लॉस क्या लगा है? इफ यू पुट इट इन अ मशीन के स्टॉप लॉस ये डाल दो, then it is going to be same with everyone. But market is not same every day, volatile, non volatile, trading, trending, right? And the last one is required, you can have a fixed percentage stop loss. So you are really stubborn in the market and you don't want to understand that, but you want to say, okay, fine, I'm going to make 1%, and every time I want to make around 0.75 or 0.5% of percentage of stop loss or below. You can do that. You can always fix it. So you have 3 options. of keeping as a stop loss. Either of them you can keep it, and feel free to move your stop loss. You do once, you do twice, you do thrice, you do 4 times. While doing this, you will have an advantage. Why do you think we have a better chance of going right? Because we are seeing daily candlestick. Okay, and after doing daily candlestick, we are going on a lower time frame. So I'll come to that part and I'll try to show it on the chart. It's a multi-time frame importance. Now here I'll try to explain something very important. Daily time frame is something someone, you can say your colleagues, your friends. Now you're going to talk, आप किसी से बात करने जा रहे हो. Maybe you want to talk to your friends about, there's a now I have finalized a girl and I want to get married. So what do you do? आप सबसे पहले किसी को तो साथ में लेते हो, चार दोस्तों को पटाते हो, दिस इज अ गर्ल which I am going to get married. Okay, 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 fine, they are with you. And then say, हाँ अब मेरे दोस्त मेरे साथ में है. This is my daily time frame. And then comes, मैं सबसे पहले मम्मी अगर मेरे साथ में होगी, I go back and I say मम्मी को मैं पटाता हूँ. Okay, okay, I want to, this is a girl which I finalize, I want your, you say yes to this. And then Vikli is also with me. What is my chances, my probability, my chances of going and hitting and get married are more. This is what I want. I'm taking best chances. So if I have a Heikin candle which is positive in daily, positive in weekly, superb, it is more favorable. At the same time, if I am having a Heikin candle in monthly, final authority in the house, my grandpapa, bade kaka, everyone says, okay, agar ye maan gaye to shadi final hai. And then I have monthly also with me, so my chances of hitting my targets are much higher. Okay, so I will just show you over here. Okay, I'm sure all of you can see my charting screen. This is our favorite software, which is Spider Iris. Okay, all of you must be having on your terminal. So this is on the left side. I have taken a I3, which is a 3-minute chart. On the right side, I've splitted the screen into charts. One is having a single candlestick and another is having Heikin candlestick. So what I see, okay, if I see here, okay, my daily candles is green. Okay, in SBI, I'm going to start. It is a strong also. Don't look at the last candle. This last candle. This is yesterday's candle. I wanted to take on Friday. I have to check a Thursday's candle. So this was my Thursday's candle. Now Thursday's candle. See importance of candlestick. Thursday candle in Heikin, it is a flat bottom, higher high, strong body candle. However, in a candlestick, it is a red candle. So I am still not bothered so much. Why? Because here on Heikin, it is making a higher high. Of course, it must have made a higher high in a candlestick pattern also. So next day, I'm waiting कि somehow मेरी lottery लगा दे or something. I want market to open down. Okay, here on next day, which is Thursday, I'm thinking Friday it should happen. And look at here, over here. Okay, this is how it has given a close. And Friday morning markets open down. You can see here markets opening down, and I'm getting ready. Why? Because I want to buy. I have already made bullish bias. When I will buy my trade initialized condition, this is my VWAP. The moment my VWAP has been crossed out here, I bought. So somewhere around, let's say no one buys exactly at VWAP, maybe here and there. So somewhere I bought somewhere around 156.70 or 157. After buying over here, right, I know what is my trade exit condition. So if you ask me, for me it is 1%. So 157 plus 1, so 159, and somewhere here at 159 I'm out. So I take a trade at this time and I'm out at here. Now I'm done. All others are thinking, okay, what to do, and here and there. So there are ways. It's called as a re-entry with a VWAP, which we'll see if the time permits. I'm sure there's a lot of questions people might want to ask, and there's a limitation of the time. We cannot take a session in so okay, because of the time limitation, but I will try to show some examples. So I hope everyone is clear what I want. Don't mistaken, I am not buying above VWAP. You are mistaken. I'm not buying about VWAP. I'm looking for higher time frames, making my position, making my bias. I am bullish, and then I'm looking for how it opens. Then I'm thinking of buying. There's a difference. Okay, so I check maybe a Reliance. You can see Reliance. Okay, look at here. I want to buy. Okay, look here. I want to buy on Friday. I'm here. Fantastic. Market is coming down. Reliance is coming down. No buy, no buy, no buy. And over here, it gives me trade initialized condition, which is around 1458 or 14. I buy here or maybe somewhere here. You always take a higher price because we never know where the punching will happen. You take and you buy here, and after buying, okay, look how what it did. One way. Can I say here 1470? It is after buying at here we always made a 1470. Now again, I'm a very quick and fast trader. Okay, I'll just look for a 1%. Now the script is very huge. It's a 1400 rupees script or 1600, 1700 script. We do not buy in terms of percentage. We buy under 50 quantities, 100 quantities, 25 quantities, and I'm getting somewhere around this. I'm out. If I'm not out here, okay, again I wait for my second exit entry, which is below VWAP, and I see here it has closed below VWAP. Still I'm out with a positive money here. This is how I take trade. So we are not yet out. Okay, then look at this. Now this is superb example of Sipla. Everyone has seen Sipla. Okay, here we are. Okay, now here we are. Now you tell me whether we'll be taking Sipla trade or no. I will not be taking Sipla trade, or I'll be taking Sipla trade. Don't look at this candle. This is Friday's candle. This is Thursday's candle. Looking at this candle, I will not be taking a Sipla trade. Let's see what has happened in Sipla trade. Wow, look at this. It VWAP crossed and it went up. Now don't mistake, this trade is not part of what what one should do. Why? Because it's a gap up which we don't look for. Secondly, look, this guy was not with us. We were not having a strong candle, so we spent around 15-20 minutes understanding strong candle. And then, you know, this is one more example. I'll take Reliance, uh, Baja Paint. Okay, now Baja Paint, you will see very interesting. Baja Paint, yes, we buy, gap down, crossing, we buy here. Okay, and we somewhere around 462. What is the price it made? 469. 460 to 469. If I'm looking for 1.5% or 1%, I'm already out. Now what happens? Look, throughout the day it has made, and this is called as a re-entry. Only after doing expertise in this kind of systems you can enter for re-entry. I will not suggest this because it's not so easy to do re-entry. Who will sit for the entire day? So I will just go for a small setup. So although someone might say, okay, sir, Berger print 460 say it went to 490 or 500. Okay, it has made such a huge 40 matlab almost 10% chala, and what we end up, so we follow our system. Okay, don't go because kisi और script नहीं बना. Look at a beautiful trade. Axis Bank. Okay, we were here. Buy. Absolutely. Wait for the trade initialized condition. Go down. Went down. Oh, fantastic. I'm waiting for buy. Get entry at 380. Okay, you are out 385. Almost made 2%. Or you come out here. Very simple trade. Okay. So I'm trying to show you what you can avoid, what you can take. There's a little bit difference. This is TVS motor. Okay, what we have to do? Buy. Look here. Go down. It went up from here. Okay, 330. Look, 339. More than 3%. I'm done. So many examples. Okay, like this. Sipla I showed you, we wouldn't have taken. Berger Paint I showed you. Why re-entry? It made 20%, but we just would got 1%. Okay, so we have. Okay, I'll just time is not there, but I will try to just tell you what is how to trade Heikin positionally. Heikin positionally, you can check it on daily time frame. Okay, you take a trade. The rule is very important. You need a significant trend reversal candle. Trend reversal candle means a candle should close above previous candle's high. You get it, then you start following only the flat bottom candles. The moment you see red candle, you come out, and that is the way you trade a positional strategy. So we can always add on to this. We don't have so much of time. Okay, we're running out of time. Now it was a great talking to you guys. Of course, we'll take some questions, and I would like to thank you, my Chief Investing Officer, Mr. Shailendra Kumar, who's my mentor. Okay, because of him, I'm able to talk to you guys. Of course, my Vinita Sharma, who's our head research in Nanolia Financial Advisors, right? And at the same time, thank you to the entire Spider support team. You can always contact them on the Spider softwares. This is a support email address, and this is them. Thank you so much, everyone. Thank you.